Well, it's always tough to say when the end is going to be. I mean, you're going to get some down days. You're going to get even some down weeks here. And the question is, right now we're getting so much conflicting information. We're getting good employment information, but of course that's because we reopened. But as we may start to roll back on the reopening, people themselves, they don't need to be told by their governors and the mayors that they can't go out. They're getting scared because they see the numbers go up. And that's why Phil LeBeau was talking about cancellations of trips that have previously been booked. So people themselves are rolling back their own plans to go out and so on. So we got that tension between reopening and the raging second wave, or whatever you want to call it. So it's very uncertain, and that's why we want to stay focused at BMO Global Asset Management on those stocks that will do better or will do well in this environment of uncertainty, such as consumer staples, such as Kroger, such as Sprouts Farmers Market, and Newmont Mining, because that's a gold play, and with the amount of cash that's been put to work by the Fed, or the amount of liquidity, you know that gold, in fact, hit an all-time high last week. So we want to have a diversified, slightly defensive bias in our portfolios because of the uncertainty in all of the tension between the numbers that we're seeing here.
Mentioned the election, which is increasingly a point of debate. Firms like Goldman have talked about the potential impact on corporate tax and hence their earnings estimates. But today, J.P. Morgan says that a Democratic victory, in their view, would be neutral to slightly positive, as they argue the tax component would be outweighed by a lessening of U.S.-China tensions. What's your thought on that?
Yeah, I mean, I think there are some pluses and minuses. I think a lot of it, though, is just perception at the margin. If you consider, for example, President Trump and company have really laid the groundwork for almost, at least in the U.S., an ideal capitalist structure, right? We've got low interest rates, we've got low tax rates, we've got low regulation, we have working class Americans, battling each other rather than clamoring for more wages in many respects. So I think, from that perspective, you've sort of hit the North Pole, if you will, on capitalism. And so while I suspect and I believe that tax rates are going to go up no matter what happens with the 2020 election, we are talking to clients about converting perhaps from IRAs to Roths, from revisiting your estate plan, for perhaps accelerating some capital gains into this year. So that, I think that higher tax rates, just with the debt that we're going to face, is an inevitability. But I think that as that starts to loom, and it looks like, historically speaking, August is about the time when investors start really discounting the November prospects into the market, we think that will ultimately impact the markets. And, notwithstanding certainly China relations, I think that taxes are important and have a much bigger impact on present values than, potential for a trade deal.
Yeah, I suspect we're going to be talking a lot more about that. It's interesting to hear your comments that could potentially be inevitable. And I guess perhaps not that surprising when you see what's going on in terms of ballooning debt. Jack and Ernesto, we're going to leave the conversation there. Thank you so much for joining us today.
Thank you.
Thank you.
Well, Uber buying Postmates for $2.6 billion worth of its stock. That translates to about 84 million shares that Uber will be giving to Postmates shareholders. The deal not unexpected, but does bring some consolidation in the delivery of food in the U.S. market. Let's get to Deirdre Bose.